You know, in this business, the hardest thing isn't buying or selling. It isn't even figuring out whether the market is going up or down. The hardest thing is catching the real moves, the big trends before they run away from you. That's where the money is. Not in scalping a point here or there, not in scratching for crumbs. The fortune lies in the big swing. And if you don't learn to catch those explosive trends, you'll spend your life chasing shadows. I learned that the market will give you clues before it makes its greatest runs. But the trouble is most people won't listen. They want comfort. They want to wait until everybody agrees, until it feels safe. And by the time it feels safe, the trend is already halfway gone. Do you see the trap there? Tell me, haven't you ever jumped in just when it was too late? I used to sit there, young and eager, wanting action every hour of the day. If a stock ticked up a half point, I thought I had to be in it. If it dipped, I thought I had to be out. I was chasing the market, instead of letting the market show me where it wanted to go. And you know what? That habit cost me more money than any losing system or bad tip, because when the real move came, I was too tired, too distracted, too scattered to take it. Explosive trends don't announce themselves with trumpets. They whisper. A stock will stop going down even on bad news, or it will keep rising even on dull days. The public ignores it. The papers don't talk about it. But if you're watching, you can see the accumulation. Somebody is buying. Somebody with size. Somebody who knows more than you or me. That's the signal. And if you're smart, you don't argue with it, you ride it. But here's the catch: riding a trend isn't just about spotting it. It's about having the courage to hold it. Can you do that? Most can't. They get shaken out by the first wiggle. They take a small profit because they're scared it might turn against them. And then they watch from the sidelines while the real move unfolds without them. That's why so few ever get rich from the market. The money is there, but the nerve to hold, that's rare. You see, the crowd thinks in short bursts. They can't stand waiting. They'd rather take a sure nickel today than hold out for $1 tomorrow. That impatience is what feeds the great operators. While the crowd flips in and out, the operator is building his line, adding when the market confirms him, holding while the trend matures. The crowd is providing the fuel. The operator is waiting for the explosion. And when it comes, he's already aboard. I'll tell you something. Every big move I ever made was because I caught the trend early and held on longer than most men could stand. It wasn't luck. It wasn't guessing. It was studying the tape, studying the market's behavior, and then having the discipline not to meddle once I was right. Have you ever been right in the market and still lost money? That happens when you don't have the discipline to hold. Being right isn't enough. You've got to stick. Now, don't misunderstand me. I don't mean you should jump into every stock that jiggles and hope for an explosion. No. That's how you go broke. What I mean is this: wait for the market to tip its hand. It always does. Wait for that line of least resistance to appear. The moment when a stock just refuses to go down anymore, or when it breaks out of a range with volume and doesn't look back. That's your chance. That's where you put your money to work. And then you sit. Sitting, I tell you, is the hardest job a trader ever has. Anybody can buy. Anybody can sell. But to sit tight when you're right and not let the little fluctuations shake you, that's where the real test lies. And if you can do that, if you can hold on through the noise, you'll catch those explosive trends that make all the difference. Isn't it strange that the simplest thing, just sitting, is the toughest for most men? Think about it. The big operators, the real market kings, they didn't get rich scalping points. They made their millions by being in the market for the big move. They let their profits ride until the trend had spent itself. That's the secret, plain as day. But people don't want to hear it. They want something exciting, something complicated, some secret formula. There is no formula. It's patience, nerve, and discipline. That's all. Do you have it? When I was a boy watching the tape, I didn't know what I was really learning. But I learned to notice when a stock wouldn't go down on bad selling, or when it climbed steadily without effort. I learned to feel the market's strength and weakness. And over time I understood that tape tells the truth before the world sees it. If you can catch the truth early, you're ahead of the crowd. And if you stay with it, you'll ride the explosion while they're still asking what happened. You must understand the market is never wrong. Your opinion might be wrong, your timing might be wrong, your nerves might betray you, but the market itself is never wrong. When a stock is acting strong, don't argue with it. When it's acting weak, don't kid yourself. The operator's job is to follow, not to fight. Are you guilty of arguing with the tape? I used to be. I paid for that lesson many times. Catching explosive trends requires that you train yourself out of wishful thinking. The crowd wishes the market would do this or that. They hope, they pray, they imagine. But the tape doesn't care. The tape tells you what's happening, not what you want. And the sooner you learn to listen without prejudice, the sooner you'll be ready to catch the next big move. Let me give you an example. In my time, I've seen stocks sit idle for months, boring everybody, going nowhere. And then, all at once, they start to climb. Slowly at first, quietly. No headlines. But if you've been watching, you know something's stirring. That's when you buy. Not after the newspapers make a fuss. Not when the crowd rushes in. You buy when the action whispers, not when it shouts. Can you spot that whisper? Most people won't. They want certainty. They want someone to tell them, this is the stock to buy. They can't act on a quiet signal, but certainty comes at a price. By the time everybody's certain, the stock is already far gone. And that's why the public always pays retail while the professional buys wholesale. You see the difference. The public is always too late because they don't trust themselves. They wait for outside confirmation. But the professional doesn't need confirmation from the newspapers or the neighbors. The market itself is all the confirmation he requires. A stock holding firm against selling pressure. That's enough. A breakout that doesn't reverse. That's enough. You don't need more. Anything more is already too late. And once you're in, you've got to train yourself to hold. You'll feel the itch to sell after the first good rise. Your brain will scream, take it before it slips. But if the trend is just beginning, that's the worst thing you can do. The big money isn't in the first few points. The big money is in the whole swing. You've got to let your profits grow. Don't cut them short. Haven't you done that before? Sold too early and watched the stock double after you got out? I've done it more times than I care to admit, and each time it burned me enough to teach me the lesson again. The market punishes impatience. It rewards those who can wait. But waiting is agony for most. That's why most never catch the big explosions. Now let's talk about timing. You can be too early, and that's as bad as being wrong. Buying before the trend is ready is just as dangerous as missing it entirely. How do you avoid that? By waiting for the signal. By watching for the line of least resistance to change. It's like water. Water always finds the easiest path. The market's the same. When resistance breaks, the trend begins. But not before. Do you see? You've got to think of trading like hunting. You don't fire at every rustle in the bushes. You wait until you see the target, until you're sure. Then you act quickly, decisively. And once you've got it, you don't let go. That's how you catch explosive trends, by waiting, by acting, by holding. Anything else is just noise. The trouble is, most traders want excitement, not profit. They want the feeling of action. They confuse movement with progress. But the real operator doesn't care about excitement. He cares about results. He doesn't need to trade every day. He doesn't need to be in every stock. He needs only to be in the right stock at the right time. And when he is, he sits. Can you resist the temptation to overtrade? That's the question. And let me tell you, there's no shame in waiting. The tape will tell you when it's time. Your job is to preserve your capital while you wait. Don't waste it on small bets that distract you. Save it for the big swing. Because when the trend comes, you'll need to have size on it. A small line won't make you rich. A big line, at the right time, will. But you can't have it if you've frittered away your money beforehand. You might be thinking, but what if I miss it? That's the fear that drives most men into bad trades. They can't stand the thought of missing out. But missing one move won't ruin you. Losing your capital will, and the market will always give you another chance. There will always be another explosion. The key is to be ready when it comes. Do you understand that? That's why I always say don't anticipate, participate. Let the market show you. Don't guess. Don't hope. Don't force it. Watch. Act when the moment is right. That's how you survive. That's how you grow. And remember this: when you're wrong, get out. Don't argue. Don't rationalize. Don't hold on hoping it'll come back. The market owes you nothing. If the move doesn't happen the way you expected, you're wrong. Out. Take the loss and preserve your powder, because the real move, the big one, is still out there waiting. But when you're right, when the trend is exploding, then you must hold with both hands. Add to it if the market lets you. Pyramid into strength, not weakness. Let the trend pay for your courage. That's how fortunes are built. That's how legends are made. I tell you, the market hasn't changed since my time. The tools may look different, the names may change, but human nature doesn't. Fear and greed, impatience and hope, they drive the same mistakes now as they did then. And that means the same opportunities exist for the man who can master himself. Isn't that true? The market isn't a puzzle to be solved. It's a mirror showing you yourself. If you're weak, it will exploit your weakness. If you're strong, it will reward your strength. If you're impatient, it will take your money. If you're disciplined, it will give you wealth. So when you ask how to catch explosive trends before they run, the answer is really this: learn to master yourself. Because the market won't change. Only you can. And when you've mastered yourself, your nerves, your impatience, your need for action, then the market's whispers become clear. You'll see the trends forming before the crowd. You'll ride them while the others doubt. You'll hold them while the others sell too soon. And when the explosion comes, you'll already be aboard, watching your fortune grow while the crowd scratches their heads. Explosive trends whisper before they shout. That's the truth of this business, and it's a truth most people never learn. They come to the market with their ears tuned for noise, for clamor, for headlines. They want to hear the crowd screaming. They want certainty. They want confirmation. But by the time the crowd is shouting, by the time the headlines have picked it up, by the time the tape is screaming with volume and excitement, the real money is already gone. The men who make fortunes, the men who ride the great waves, they are already aboard, sitting tight, because they caught the whisper before the world heard the shout. You know what a whisper looks like in the market. It isn't dramatic. It doesn't call attention to itself. It's subtle. A stock that has been falling for months suddenly stops falling. The bad news keeps coming. The papers talk of nothing but trouble, and yet the stock won't break. That's a whisper. Or a stock that has been moving sideways in a dull range suddenly begins to inch upward, slowly, persistently, with no explanation and no fanfare. That's another whisper. You won't read about it in the papers, you won't hear about it from your broker, and you won't see the public rushing in. But if you're watching closely, if you've trained yourself to listen, you'll hear it. Tell me, have you ever noticed a stock acting stronger than it should and wondered why? That wondering is where most men stop. They notice it, but they don't trust it. They wait for someone else to tell them it's real. They wait for confirmation that everyone can see. But confirmation is expensive. By the time you get it, the price has already moved far from the whisper. That's how the market fools the crowd, and that's why the crowd always pays retail while the wise operator buys wholesale. The whisper is the wholesale price. The shout is the retail ticket. Which do you want to pay? Now, whispers don't last forever. They're fleeting. The market gives you a chance to act before the noise begins, but it doesn't wait for you. That's why patience and attention are everything. You have to sit through the dull times. You have to watch stocks that look like they're doing nothing, and you have to notice when they quietly refuse to act the way they should. A stock that doesn't go down on bad news is telling you something. A stock that keeps edging higher even when the market drifts is telling you something. Are you listening? The real trick is to separate the whisper from the false signal. Because not every little twitch is meaningful. Most of the tape is just noise, little fluctuations that mean nothing. The crowd confuses noise for opportunity, and they lose their money in the chop. But the operator waits for the consistent whisper, the steady, quiet strength, the refusal to break down, the persistence of accumulation. It's never just one tick, one day, one odd move. It's a pattern, a steady undertone. And once you see it, you know somebody is building a position, somebody with size, somebody with patience, somebody who knows something you don't. And when that somebody is buying, do you really want to be selling? I'll tell you something from my own experience. Some of the biggest moves I ever caught began in the dullest markets. Stocks everyone had forgotten about, sitting in the corner lifeless. And then slowly, quietly, they began to stir. A point here, a half point there. No reason, no explanation. Just a whisper on the tape. And I bought. I didn't buy big all at once. I tested. I felt the stock out. I added when it acted right, when it confirmed its strength. And by the time the crowd noticed, I was already in with a full line, sitting pretty, ready to ride. That's the difference between catching the whisper and waiting for the shout. Haven't you seen that happen, where you only got interested after the move was obvious? The whisper is uncomfortable. It feels uncertain. That's why the public ignores it. They don't like uncertainty. They want the feeling of being right immediately. They want proof. But in the market, the proof comes too late. You can't wait for comfort. You have to train yourself to act when things are just beginning, when it's still hard to believe. The operator thrives in that discomfort. He knows that uncertainty is the price of early entry. If you can't stomach it, you'll never catch the explosion before it runs. Think of it this way. If you wait for the crowd to shout, you're no longer trading your following, and following the crowd doesn't pay. The crowd buys the top and sells the bottom. The operator, listening to whispers, does the opposite. He buys when nobody cares, and he sells when everybody's screaming. That's how he makes his fortune. Do you see the difference in mentality? The whisper also teaches you humility. You don't know why the stock is strong. You don't know the story. You don't need to know. The market is smarter than you. The tape tells the truth before the newspapers. When you see that quiet strength, that refusal to go down, that steady accumulation, you don't argue. You don't demand an explanation. You act. And later, when the news comes out, when the reason is revealed, the crowd will act. But by then, you're already long, already in profit, already ahead. It's human nature to resist whispers. People want certainty, clarity, drama. They ignore the small signs because they don't seem important. But in trading, the small signs are everything. The whisper is the seed of the explosion. And if you train yourself to catch it, you'll be in position when the big move comes. But if you wait for the shout, you'll be chasing. And chasing is how you lose. So, watch for the whispers. Watch for the stocks that hold up when they should be breaking. Watch for the quiet accumulation that doesn't fit the news. Watch for the strength that nobody else sees. That's your advantage. That's how you catch the trend before it explodes. And once you've caught it, sit tight. Don't let the first shout scare you out. The explosion is only just beginning. Sitting tight is harder and more profitable than buying or selling. Most people don't believe that when they first hear it. They think the hard part is deciding when to buy or guessing the right moment to sell. They sweat over their entry points. They torment themselves over exit signals. And all the while they ignore the real test of a trader, which is patience. The true test is whether you can hold on when you're right, whether you can sit tight when the market is paying you. Because that is where the real money lies, not in a quick snatch here or there, but in the big move that takes time to develop. You see, anybody can buy a stock. Anybody can sell a stock. That part takes no genius. The market is full of men who can execute a trade. But very few can do nothing after they've made it. Very few can sit still while the market does its work. And that is why very few ever get rich from speculation. They don't fail because they can't buy or sell. They fail because they can't sit. Tell me, haven't you ever cut your profit short just because you couldn't stand the waiting? The crowd has no patience. They want action. They want excitement. They want to feel smart by locking in a small win. They take a 2-point profit and call it a success, even when the stock goes up 20 points after they're out. That's the curse of impatience. They feed on crumbs while the big feast passes them by. The operator, on the other hand, knows that the feast takes time to cook. He buys when the trend begins, and then he waits. He sits. He does nothing but watch, because he knows that the big move doesn't happen overnight. Sitting tight is torture for the average man, because the market doesn't move in straight lines. Even in a strong trend, there are pullbacks, there are corrections, there are shakeouts designed to throw you off, and most men can't stand seeing their paper profits shrink for even a day. They panic, they sell, and they miss the rest of the move. That's why the market is a cruel master. It knows how to test your nerves. Are your nerves steady enough to endure the wiggles and jolts while the big trend plays out? I learned early on that my biggest losses didn't come from being wrong, but from being right and not holding. I would get in on the ground floor of a move. I would watch it rise, and then I would take my profit too soon. I thought I was being clever, locking in gains. But later I would see the stock double, triple, and I would realize that my cleverness had cost me a fortune. That lesson burned itself into me. The real profits come from sitting tight, from doing nothing when every instinct in you screams to do something. The public doesn't understand that doing nothing is an action. They think you must always be in motion, always buying, always selling. But the operator knows better. He knows that sitting is the most difficult, most active decision there is. Because sitting requires discipline, it requires control over fear and greed, it requires belief in your judgment. And most men don't have that control. They're slaves to their emotions. They sell at the first scare, they jump at the first temptation, they let their nerves run the show. Haven't you felt that urge yourself to just get out, to do something? Anything. Just so you don't have to sit still. When you sit tight on a big trend, you'll feel doubt gnaw at you. You'll hear other traders telling you to take your profit before it disappears. You'll read headlines warning of trouble. You'll see little reversals that look like the end. And through all that, you must do nothing. That's the test. That's what separates the operator from the crowd. Because the operator knows that trends last longer than the public expects, and the biggest moves happen after the crowd has given up on them. Sitting tight isn't laziness. It's strategy. It's letting your money work for you instead of constantly working your money. It's knowing that the market pays you not for the number of trades you make, but for the size of the moves you ride. One big move, caught and held, can make your whole year. 10 little trades, even if they're all winners, may not amount to the same. That's the math of speculation. That's why sitting tight pays more than trading every tick. Think of it like this. The market is a great mechanism for transferring wealth from the impatient to the patient. Every time the crowd sells too soon, every time they give up their position because they can't sit, that wealth transfers to the man who can. And the longer you sit, the more the market takes from them and gives to you. Do you see why patience is worth more than cleverness? I'll give you an example. I remember holding a stock that was in a strong uptrend. It had already risen 20 points, and everyone around me was urging me to sell. They said it couldn't go higher. They said it was dangerous. They said I should be happy with what I had, but the tape told me the trend was still strong. So I sat. I ignored the chatter, I ignored my own nerves, and I held. That stock went up another 40 points before the trend ended. If I had listened to the crowd, I would have taken a small profit and missed the fortune. But because I sat tight, I made more in that single move than I had in dozens of smaller trades combined. That is the power of sitting. And yet, most men will never do it. They don't trust the market, and they don't trust themselves. They feel safer taking small bites. They tell themselves a profit is a profit, and they congratulate their small successes. But in truth, they are paying for their fear. They are paying for their impatience, and the market doesn't forgive that. It rewards only the man who can endure. Sitting tight is not about blind hope, don't mistake it. It's about sitting only when you're right. If the trend isn't there, if the tape doesn't confirm you, then sitting is suicide. You must get out when you're wrong. But when you're right, when the market proves you right, then you must have the courage to do nothing. That's the paradox. Act quickly when you're wrong. Sit tight when you're right. That is the hardest combination for most men to master. I've seen traders destroy themselves because they couldn't sit. They had the right idea, the right entry, but they sold too soon, then tried to jump back in, then got shaken out again. They turned a winning position into a series of losing trades. Not because the market was against them, but because they were against themselves. The market was ready to pay them, but they wouldn't let it. Their own impatience cost them everything, and I've seen the opposite too. Men who could sit, men who could endure the boredom, the doubt, the corrections. Men who held their line while others dropped theirs. Those men made fortunes. They made it not by being smarter, not by being quicker, but by being steadier. Their strength was in their stillness. They understood that the big swing belongs to the man who can sit, and so they sat. The market will always tempt you to move. It will shake your confidence. It will bait you with quick profits. It will threaten you with sudden drops. And every time you act on those temptations, you risk cutting your profit short. The operator ignores them. He trusts the trend until the market itself tells him it's over. That is how he makes his fortune, not by darting in and out, but by sitting tight and letting the market do the heavy lifting. Master yourself, or the market will master you. That's the law of speculation, as sure as the sun rises. The market isn't your enemy. It isn't your friend, it's a mirror. It reflects everything inside you, every weakness, every impatience, every bit of greed and fear you carry. If you walk into it without discipline, it will strip you bare. And yet, most men blame the market for their losses. They say it tricked them, it turned on them, it was unfair. But the market is never wrong. Only the trader is wrong. And if you can't master yourself, the market will teach you the hard way, again and again, until you've got nothing left to lose. Tell me, haven't you ever known you were breaking your own rules and still pressed the button, only to watch the market punish you? The greatest enemy in this game isn't the market, it's the man in the mirror. You think you're fighting prices, you think you're fighting trends, but really, you're fighting your own emotions. Fear whispers to you to sell when you should be holding. Greed pushes you to buy when you should be waiting. Hope keeps you clinging to a losing position long after the tape has told you you're wrong. And impatience drives you to trade when there's no trade to make. Each of these is inside you. The market doesn't create them. It only brings them to the surface. If you can't put them in check, they'll destroy you. Mastering yourself means learning to do the opposite of what your feelings tell you. Your feelings will tell you to grab a profit quick. Discipline tells you to sit tight for the real move. Your feelings will tell you to hold on to a loser, hoping it'll come back. Discipline tells you to cut it and move on. Your feelings will tell you to trade because you're bored. Discipline tells you to wait until the right moment. It's a battle, day after day, between your instincts and your reason. Which one wins in you? I've known traders who had all the market knowledge in the world. They could analyze charts, they could read the tape, they could spot trends as well as anyone, but they couldn't control themselves. They doubled down on losers, they sold winners too early, they jumped in and out like nervous rabbits. And in the end, all their knowledge meant nothing. The market doesn't pay you for being smart. It pays you for being disciplined. And discipline is nothing more than mastering yourself. When I was younger, I thought the market beat me because it was cleverer than I was. I thought if I could just learn more, study harder, I'd finally outwit it. But with time I realized that it wasn't the market outwitting me, it was me outwitting myself. I was clever enough to get in at the right time, but too weak to hold. I was quick enough to spot a loss, but too proud to admit I was wrong. I let hope and fear drive me. That's why I lost. The day I understood that, everything changed. The market didn't have to be conquered. I had to be conquered. Look around you at the crowd. They can't master themselves, and that's why they're always late, always wrong. They buy when it feels good, when everyone else is buying. They sell when it feels terrible, when everyone else is panicking. Their actions are driven by emotion, not reason. And because the majority can never master themselves, the majority must lose. That's the iron law of speculation. The profits of the patient and disciplined are funded by the mistakes of the impatient and reckless. Which side are you on? To master yourself, you must first know yourself. You must know where you're weak. Do you crave action too much? Then boredom will be your downfall. Do you hate admitting mistakes? Then you'll hold losers too long. Do you love to feel right? Then you'll sell winners too soon just to say you were correct. Each weakness has a price. The market will collect it from you again and again until you've paid in full. But once you recognize your flaws, you can guard against them. That's the beginning of mastery. Some men can't be taught. They'll lose fortunes and blame the market, never themselves. They'll keep repeating the same errors until the market breaks them.